Now, I want to talk briefly about what happened in the last 15 years in the region. You did have economic growth, and the growth was similar to other developing countries, around 7.5. The difference in the Arab region, or in the non-oil exporting states, that you had economic disparity. You had few people who benefited from privatization, who benefited from reform, who had access to finance, and the few well-to-do became more well-to-do, and the poor became poorer. And that has led to an anti-market sentiment today in the Arab region. If you go to Egypt or Jordan or Tunisia, people are beginning to think about going back to the failed socialist principles of the 60s, where governments took over industry that were inefficient, did not produce jobs, and produced low-quality goods. Therefore, I believe that there has to be a debate in the Arab region today about reform. What is reform? It's not what happened in these countries in the last 15 years. Reform starts with the word competition. Reform starts with giving people equal access to finance. Reform means corruption has to be wiped out, because corruption, if you look at it, it's a system that is an attack on the market economy. Corruption is an attack on efficiency. Corruption is an attack on competition. And most importantly, corruption is an attack on the rule of law. And therefore, there has to be a debate, a vibrant debate in these countries, to look forward and say what we had wasn't genuine reform. We had crony capitalism. We had entitlements. True reform is competition. True reform is access to capital. True reform is bringing foreign capital. True reform talks about investing in small businesses. And this is an area where the Arab world has fallen behind. If we take a look at this country, in the last 3 decades, over 60% of the new jobs were created by small companies. There are 29.5 million businesses in this country. 99% of them employ people under 500. And therefore, the small business community, people who want to start a business, must have an opportunity to finance their business, must have an opportunity to compete fairly. So what we had wasn't really reform. It was entitlement, corruption, and privileges for the few. Now, if we look ahead, talking about 2012, the countries I'm talking about, Egypt, Tunisia, Jordan, and other countries in the region, will have an anemic and tepid outlook. Why is that? It's for the following reasons. Number one, budget deficits in these countries will expand. This is due to increased subsidies and higher food prices. Foreign exchange reserves will decline due to drop in tourism and a drop in remittances from abroad. 3, the local business community is on standby or may have left the country. 4, foreign investment has dropped significantly. And finally, due to the debt situation in Europe and the economic situation in the US, foreign aid to these countries may not increase. It may even dwindle. Let's look at Egypt today. And Egypt, in my view, is the central player in the region. Without a stable Egypt, without a prosperous Egypt, the country would remain unstable, fragile. So, today, the Egyptian budget deficit in 2012 will probably increase to 8.6% of GDP. By the end of June of this year, economic growth has dropped from 5% in 2010 to 1.8%. Unemployment has risen from 9% to above 12%. Tourism in 2010 in Egypt, you had 14 million foreign tourists. They generated nearly $13 billion of income. This year, it is expected that the tourism will be down by at least 30% and would reduce foreign exchange earnings by $3.5 to $4 billion. The only positive elements on the Egyptian scene is the fact that oil revenues are up, Suez Canal transit fees are up, and aid from the GCC will be up. If we look at Tunisia, Tunisia will face the same problems, big budget deficits. Already, the tourism receipts are down by 40%. Over 100,000 Tunisians who were working in Libya had to leave their jobs and go back. And today, the unemployment rate in Tunisia stands around 13%. Foreign direct investment in Tunisia has dropped by 35%, and the foreign exchange reserves of Tunisia have declined by 82% in July to equal $8 billion, which only covers 3.5 months of imports. For the years ahead, Tunisia probably has the best chance among the various Arab countries because it has a small population, it has a diversified economy, it has an industrial sector. So if the political transition goes smoothly, and if tourism gets back to where it was, if you have increased foreign aid, I think Tunis will emerge by 2013 stable and economically. Now let's take a look at Jordan. Jordan, again, will have the same problems: increased budget deficits, high unemployment, reduced foreign exchange earnings. In Jordan today, unemployment is around 13.2%. The budget deficit next year will go up to 14.6% of GDP. For the years 2011 and 2012, the fiscal deficit will require Jordan to receive $2.5 billion in grants. The aid from Saudi Arabia and the other Gulf countries in 2011 has helped Jordan immensely in covering its budget deficit, and that aid amounted to $1.4 billion. Also, Jordan has suffered from a drop in tourism, and there is no doubt that the events in Syria will have a negative impact. If we look ahead now, and I think what the Arab world has to look at is a new economic construction, but this new economic construction has to be based on competition, on technology, and on a workforce that is productive. To help these countries, I'm told I have only a minute, I hope you give me 2 minutes. The following has to really take place. You need to provide increased financing opportunities for small businesses. You need to invest in infrastructure You need to invest in education and training to produce productive jobs. These countries also, I'm talking about the Arab countries, have to also learn how to work collectively and create an intra-Arab market. And finally, the international community has an important role with the GCC to provide investment opportunities and financing at concessionary rates. If we take a look at Egypt, Morocco, Jordan, Algeria, these countries in 2012 require $35 billion to meet their budgetary needs. Finally, the US and Europe, in my view, has to open their markets more for the goods and services that are produced from this country. I have a few other things to say, but I don't know if Molly can give me one more minute.
You're over already, but if you can do this in 1 minute.
Okay. Looking ahead, the Arab world has to reconstruct. And how do you reconstruct? First, you have to create a new culture of venture capital. You have to go from a culture of trading and buying real estate to a culture where you have entrepreneurs, where you have people who are willing to bet on people of ideas, on people of talent. We need to see an Arab Bill Gates down the road. We need to see an Arab Google. And there's a lot of money in the region. You have trillions of dollars, but hardly any money goes to promote venture capital. Two, you need new Arab immigration laws where Arabs from Egypt or Tunisia or other places who are talented, who are scientists, who can go to countries in the GCC and not only go and work for 6 months, but go have a green card and hopefully down the road be a citizen. Finally, we need to introduce bankruptcy laws in the Arab countries. Bankruptcy laws help businesses that fail to restructure, come back. In the Middle East, if you lose your business, you also lose your personal assets. So when you introduce a bankruptcy law, you can separate people's personal assets from their business assets. And these are principles and ideas that the Arab world has to adopt in the next 10 years if it's going to enter the 20th century, 21st century, and become productive and an exporting country rather than just exporting oil.
Thank you.